Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, December 8th, and we are coming at you at what is appearing to be a multi-day BART pattern in the crypto markets, and equities have been doing, more or less what we've described when we've described it, and crypto has been a little bit more tricky and difficult. So let's go ahead and dive in and check what's going on with sentiment to start. So daily sentiment for Bitcoin picked up above the neutral level of 50. Ethereum still a little bit bearish, but looking better than it has, and we will look into that. Have a few outliers above the neutral level, which definitely more than we saw yesterday. We've got Avalanche, Solana, Polkadot has been up there, BNB. So looking a little bit more positive. We've got, a little bit of green in the 24-hour area. So positive to see, but will that last with obviously these decreased trading volumes and mostly decreased tweet volumes? So looking at Bitcoin sentiment, pop, going into the morning, which is, when we started to see that rise. We did post in the Trade the Chain community and on Twitter yesterday that there was an RSI trend to be tracking for Bitcoin, and that we were and Ethereum, and that we were likely to see some potential bullish price action. We actually ended up getting more than what I initially expected, but the directionality was at least correct. And now that sentiment is starting to curve higher, we definitely want to see this stay steady above 55 and 56 for potential continuation. Else, if it starts to creep back down to the neutral level, we'll know the move has likely been stalled or is ending soon. For Ethereum, very bearish sentiment, as we can see from overall price action, but started to pick up very slightly, back to 46 from 43. So making progress, but still in that neutral level. Definitely want to see that pick up to continue to break higher above the resistance levels of 1250 and potentially 1270. So let's go ahead and dig into the price charts and see what's going on. We're going to start with the dollar index, just because that's been kind of pushing around risk. As we can see here, potentially it has been rejected off of the 1-day 200 moving average, but we'll have to see if that ends up getting confirmed. It could definitely continue to fall, or it could attack it one more time for potentially a double top before getting knocked lower. But DXY not looking very bullish right now, and looking at where we would expect it to potentially catch itself. I would say something like these levels right here. So, something maybe 101, maybe 103. So between 101 and 103, we've seen a good bit of trading in this level. So would expect, maybe something like this. That would make a lot of sense. We could also do something, like that, and form, a little bit more of a longer double top heading into the end of December. So, but moral of the story, DXY looking a little bearish. If you were watching my tweets on equities yesterday, I showed a diamond trading pattern, which I will demonstrate to you guys right here. This is what a diamond pattern looks like. Very similar to inverse head and shoulders, but not exactly. If you look at the S&P, it pretty much formed that exact formation. There's your triangle, and then we lifted higher. So last night I said, it was right around here. I said we'd probably see another dip before heading higher. It's exactly what happened. And that was based on the RSI trend. So I love to track these RSI trends. And so see downtrend, it was broken right at this level. And so since it was broken, it stalled at resistance. I expected, because the diamond pattern of what the formation, we have a drop, an increase, a drop, an increase, a drop, and then we break out. So it would make sense to me, or it made sense to me, that we would see one more drop, and then we broke out. As you can see, this drop bounced on the RSI trend itself, which is another confirmation. So if we break above, stall, we drop back, we tag it, and then we head higher. As you can see, the RSI is now approaching overbought levels, and I'm predicting potentially, a drop down to the VWAP around 39.40, or the 50-day moving average, which will be, a few points away from each other, and then either a recovery from then, or a drop back down to the lows that we met on Tuesday and Wednesday around 39.20. So if this is the case, if we do drop lower for equities and kind of, do this motion, I would expect that to kind of more or less play out the same way in crypto. So something to track here. Obviously, resistance is going to be, first here, which coincides with the 100-day moving average as well. So we'll have to see if it can make it up there. If it does bounce here, that would be maybe a good short level, or it will flip this level and head higher. And of course, depending on what crypto does, sorry, I'm getting my lines mixed up. And depending on what equities do, I expect that to influence crypto. Although the correlation is down, it is not out. So knowing what we do about equities, let's take a look at Bitcoin. So very similar. So we had rejection here, and then initially rejected here. We had a pretty large fake out here, as we can see by this wick, and that happened about 6 a.m. just before US Open. Big drop, flush out all those longs, and then pipe along right up to both the 200-day moving average and the hourly, and the 100-day moving average. And so what I predicted and shared with the Trade the Chain community, didn't expect a full boost, but this could end up being a swing failure pattern if we end up heading back into the range. So something to consider there. I would say this is a little bit more incorrect. So we can pop here and then hop off the potentially newfound support at 16.9, or you could have kind of like another, I wouldn't call it exactly a swing failure pattern, but a test back into the range where you bounce at this confluence of 50-day moving average and VWAP, which will be about 16,888. So between 16,888 and 16,900, would expect price to continue higher, very similar to how we predicted equities, right around this level. And of course, if it breaks beneath that level, we do have the daily close here right around 16.83. So if it loses that level, then we're probably headed back into the range. Right now, it looks very strong, but we do have to test support before heading higher. Typically, I would not expect this to just zoom, unless I think equities continue to get bought up. So right now, preliminarily bullish, but you have to flip 16.9 or high 16.8 level into supports to be able to support a continued bullish move higher. For Ethereum, very similar outlook, except not really a swing failure pattern. Caught up at resistance just under the 100-day moving average. It is above the 50-day moving average and the VWAP, so it would make sense very similarly to what we described for Bitcoin and equities. Ethereum would potentially drop down to this liquidity level right around 1240, and then head higher, try and flip 1250 into supports, and of course move to the next range level. Of course, if 1240 fails, we are back within the range and ping-ponging between 1250 and 1225, 1220. And then, of course, if this level of support fails and the daily close at 1230 fails, then we're back at 1220, potentially creeping down lower. And of course, my continued thesis is that we will more or less track equities, and depending on what equities do, that will drive motion and momentum in the crypto markets. And we know what we want to see for continued equities movement, hold above this VWAP, and things are continuing looking good, but they are getting a bit oversold, and the market is not really excited about anything. So very, very important to consider the potential for a long squeeze, in reverse of the short squeeze that we saw this morning. So tomorrow, just FYI, we have PPI tomorrow at 8:30 a.m. ET, expectations are 0.2% month over month. If that is a miss, I would expect markets to probably take a tumble. So, and if it, of course, if it's a beat, then markets should head higher, at least, preliminarily. So the good way to approach this is if we continue to get a boost today, and let's say Bitcoin and equities, make it up to this next level of the range. Maybe Bitcoin's at 17.1, maybe equities are at 39.80, maybe 4K, and PPI comes in at a miss, then you're shorting this entire movement back down. You're shorting wherever that movement is, heading into PPI. If you feel like it's going to be, if we have a pretty big boost heading into PPI, and then of course, if we continue to consolidate and form, some bullish movement, maybe it's a ascending kind of wedge motion, or ascending triangle, I should say, then, maybe we expect PPI to be a beat and prices zoom into the weekend before getting sold off next week as we anticipate CPI. So understand, exactly what's going on in the market. We do have CPI next Tuesday. So, we really only have, 3.5 more trading days until CPI, and PPI will give us a decent indication of what CPI may hold, because, although they are on different sides of the inflation spectrum, they still make up the inflation whole. So if PPI is bad, I wouldn't, bet a whole bunch of money on CPI being good, if that's the case. So just something to consider as you place your trades, knowing what could push price around, around U.S. market open. And of course, we've always said that, most of the volatility occurs at the close. As you can see here, yesterday close, or Tuesday close volatile, Wednesday close, you're in this crappy range, but look at all this wick motion as well. That this Friday close, lots of volatility. Sunday close, ton of volatility. Last Thursday close, ton of volatility. Last Wednesday close, ton of volatility. Last Tuesday close, ton of volatility. Last 2 Sundays ago, volatility. So, it's quite clear that U.S. Open and then U.S. close are, I'm sorry, U.S. Open and then general market close, 24/7 markets is when the most volatility occurs. So good luck. Happy trading. We'll talk to you tomorrow. And if you're not in the Trade the Chain community, then all the follow-up, all the analysis, all of the, the early stuff, the stuff before I put on video goes into the Trade the Chain community for discussion. If you're not a part of the Trade the Chain community, you can get signed up for a 14-day free trial at www.tradethechain.com. And that's, of course, filled with data, information, as well as a back-end community to discuss everything that we're talking about and more. So talk to everybody tomorrow. Good luck with your trades.